Hi, this is Randy Finney with Right Side of the Chart, and today is Monday, January 9th, 2023. It's 3:18 p.m., so about 40 minutes to go in the trading day, and I want to get one more video out to you. I already did an update on the markets, but I'll do a quick, well, I did an overview on the markets earlier. I'll do a brief update here. There's, looks like it's about as good as it gets. There's that pullback. There's the gap, today's gap. You can see if you zoom in really close, see this blue line? Boom, 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 boom. There's a little dash blue line there. That is a successful, well, we'll see. Successful because I expected to do this, but that is a pullback to test the top of today's gap. 110% an objective buy point if you missed the run before, or if you took profits today on the nice run in game to pullback trade. And of course, if we go down to here to 270, that would also be an objective level. I doubt we're going to get there, but if we do, great buy point. And anything like I talked about earlier, anything much more than that, you can see a move down here. But here's the thing: we've got 2 days. CPI comes out Thursday morning, so that gives this market plenty of room, unless there's some kind of shock that comes from elsewhere. I think we're going to continue to move on up, and I suspect we'll hit my that max bounce target before then. So if everything plays out the way I'm thinking it will, we get another thrust up here. We've already hit that 275.62 target effectively. Remember, when I put these targets, they are actual resistance levels where reactions likely. They are what I call unadjusted price targets. I always sell a little shy of the actual resistance level in case the sellers step in early. So effectively, this was our buy point here, original breakout. We've hit all the targets up to that 275.62. Now the relevance is because it's already been hit, therefore, we could certainly have a reaction again. As I always say, resistance is resistance until unless it's taken out. But it's that initial tag's already happened, so now that leaves the door open for a push up here to 280. That 280 target, so a little before there. Let me give you a SPY, and then I'll get to the other ideas. SPY, that was really nice resistance there at 392.76. You can see because we had a lot of reactions here. That's comparable to the 280 level in QQQ. You had this like trading range here, and then you broke down below it. But remember, the Qs have been lagging. They went down harder, and I think they'll spring back a little harder on the upside. So the target for a SPY is still up here, 401 and/or that intersecting downtrend line. And so, there's nothing guaranteed in trading. The only guarantees I ever give you on this site is that I will be wrong, and I'll be wrong a lot. That's the only guarantee I get. So there's a lot that can happen in the markets, but I will also tell you, I guarantee, I think this is a very objective re-entry add-on, and that's it. It either plays out or it doesn't. You miss 100% of the shots never taken, so this is a shot that I think is worth taking. If things get ugly, I just extended that downtrend line. And then of course anything down below the bottom of this recent trading range is not going to be good. But right now I'm looking out today and tomorrow, and I'd like to be closed out and/or short if we hit these my near-term bounce targets before the CPI data comes out on Thursday. All right, that's QQQ and SPY. Let me give you NQ, ES, NQ, NASDAQ 100. Bam, bam, bam. There was our breakout right there. T1 hit right back here, pulled back, double bottom, divergent low. T2 hit today, carried on up right to almost a perfect kiss of T3, followed by the typical reaction, and T1. Remember, it was resistance on the way up. Resistance once broken becomes support. So this is, again, trading 101. Don't overthink it. It may or may not pan out, but that's where if you took some profits at T3, nothing goes up forever. Like I said, we were very quite extended in the near term. The short term charts here, I'll show you what the short term charts look like. That's 10-minute chart, 5-minute chart. You had negative divergence on the NQ. This is the NQ, and there's that same support level we're pulling back to right now. We're just above it. Now again, just like I sell a little shy of the actual resistance levels, you don't want to hold back for a pullback to 11,185.40. If you get it, great. But the buyers are going to see that level, and they're likely to step in early. So this right there, that's to me, a perfect re-entry. I'll give you ES as well. ES, well, you can see ES on the 60-minute chart here. this is a pretty decent resistance or former resistance now, support level 39.17, and that's where we pulled back to after getting rejected off that level there. So all right, so that's that. And the ones to watch, by the way, I always trading the index. I'm also trading some individual stocks. Let me just give you updates there. Apple, bullish, beautiful bullish falling wedge, breakout into resistance, several reactions, pull back, back test of the wedge, the two objective long entries, and then the breakout today was objective long entry number 3, and now the pullback to that level. Remember, resistance once broken becomes support. It doesn't get any better than that. Again, no guarantees it'll play out, but on a scale 1 to 10, this is a 10 for a re-entry. You could have a tight stop somewhat below. Here's the gap on Apple right there. Maybe they want to backfill the gap. That wouldn't be unusual there. And I could draw a few support levels along the way here. Let's just say this one. Really want to see Apple, if it takes out the gap, hold about 127.50. And of course, anything's possible. Remember, we're in a bear market. I'm going to show you the VIX in just a second. That's one thing I was watching today, and when the market was ripping, the VIX wasn't buying it. No, I'll get to that in 1 second. So that's something to be aware of. And of course, the fact that, I talk about objective entries, 10 out of 10, that kind of stuff. In a bull market, these would be like screaming buy signals. If you had a, period of consolidation, a little correction, then this consolidation and breakout we just had. But as I said, in a bull market, I'd put 90+% odds that we do go up to that, next target. But remember, we're in a bear market. We're not far off the lows. So never, ever fall in love with your long trades. And the takeaway is that, long trade setups, bullish setups, have a higher failure rate in a bear market than they do in a bull market. So, as much as I'm telling you, hey, this is a great objective entry, this is where we should bounce, you got to then factor in that they're counter trend trades, and therefore they have a higher rate of failing. I'm just pointing out objective levels to buy where the buyers quote unquote should be stepping in. And if they don't step in, that just means there's not enough buyers. And that's the whole simplistic breakdown of how the stock market works. Supply and demand. When you have more sellers at any given point in time in a security, it goes down. When you have more buyers at any given point, that's natural buyers, the stock buybacks, mutual funds, hedge funds, traders, even the algorithms, that fire off, buy and sells. It's that simple. All right, so the ones to watch: Microsoft hit that 231 resistance today. Let's keep an eye on that. Alphabet ran right up there, 90.12-ish. You can see that's we had a big old gap right here. So again, if you want to, well, actually the gap goes all the way down to there, but lots of reaction here. So these are the levels we need to pop. And you can see we have gap support right here. So this is an objective level to step in on Alphabet. This is GOGL, Class A shares. And then so the way it works is top of the gap, we're likely, I think this is what will contain the bounce, and then the bottom is the box here where that dashed yellow line was. So anywhere from here to here is where the buyers, again, quote unquote, should step in. If they do, then they'll probably take out 90.12 on the next run up. Next target 91.83, and then my final target 95.31, and then that's where you take full profits and or reverse to a short for a pullback trade, and so forth. And that should coincide with the 280 on QQQ roughly. Amazon took out, Amazon's doing well. It's defended that $83 long-term support like a champ. That's where, it's highlighted multiple times as a buy. It's moved in the shorter term on the 60-minute chart. It's moved up above this resistance zone, and it's back testing it from above. So in a perfect world, this is what Amazon will do, and that should also, tag at a downtrend line and or price resistance. Would be an objective level to to take long profits as a swing trader, and maybe even recycle back in on a bounce. And I'll watch this, because what that's going to do, if we get that, and again, the market will it'll decide where it wants to go after the CPI data. My guess is going to be another soft number. Market's going to probably like what they hear, but we'll see. That's a guess. We have the downtrend line, so if we do run up there, I could see another pullback and really firm up this bullish falling wedge pattern. Ultimately, we could go on and break out, and you could have a much bigger rally in Amazon. Or just craps out, divergences are taken out, and the bear market continues. So stay nimble, stay flexible, and trust Trust the charts. That's all you can do right now. Again, as I said, if you try to trade off fundamentals, it's like driving in the rearview mirror, while looking in the rearview mirror. It's not something you want to do, especially in a market like this. All right, that was, let me see, QQQ. Oh, Tesla. Tesla, I wanted to update. Definitely Tesla. Tesla, 60-minute chart. Beautiful bullish falling wedge. Positive divergences, breakout right up like a brick wall. That 122.62 first target / resistance level. That's contained Tesla. When it pops, this one should be a quick run up to the next target, which I still maintain, 136.34. That's going to give you another, if it's hit from where we're at right now, about another 13-14%. When I look at it this way, I zoom in a little closer, and it appears that we may have a bull flag continuation pattern with a flagpole there, an impulsive leg up, followed by a period of consolidation that takes the form of bull flag on declining volume, which is what you want to see. And so a pop above the flag would also be, and you also want to wait for a breakout above the recent highs there, about 123. That would, well, the measured target would be a little bit above that level, but again, that is my next target right there, 136.34. So first things first, and let's see if we can bounce off these support levels that we're pulling back to now. We're at the upper end of the pullback targets, maybe a little more downside. And let me give you the other things that we're watching. Our already updated natural gas this morning for you, breakout above the downtrend line, that level offering an objective long entry add-on. Our original long entry was right here, right off the lows, because we were at long-term support, with the second buy signal coming to break out of the trend line, which we got. And then this morning I highlighted this little minor resistance, which we took out, 3906, and we pulled back to that. So that also offers an objective add-on or new entry. That's nat gas futures. Oh, and then some of you trade the ETFs and ETNs. That would be UNG, 60-minute. Blue line's just our divergence line right here. That's not a line tool. There's our divergence, but right here you had, just like the NG natural gas futures, you have this price channel breakout, and ideally you want to just, maybe we'll form an uptrend line. We don't have one yet, but these are still the price targets there. And speaking of things that are in a downtrend, I don't call it a bear market. A lot of people would, because look, you can measure the drop. It's down 65%. It's just run of the mill. This is what natural gas does. It's either typically full throttle up or full throttle down, very little in between. Once in a while you get a little bit of consolidation, but that's the nature of this beast. So point being, this was and still remains a catch a falling knife trade, very much a counter trend trade. So again, like everything else, don't fall in love with it, but as of now it looks good. Gold, silver, that's what I wanted to update for you. I told you guys this morning, US DOLR is the US dollar index. That goes by different symbols on different charting platforms, but this is the primary uptrend line, which I suspected we'd probably get a little thrust down to, and that's what we did. So we had this period of consolidation right there, and look, boom, gap down right to the trend line. Remember, a falling dollar is bullish for gold and silver, and that's what we've seen. We've been a nice uptrend as the dollar's been falling. Should it bounce off here, as I suspect it will, I'd still, like I said, I could see, based on the posture of the PPO and the RSI, I could see the possibility of a break of the trend line and then one more thrust down here. But we're still talking a range. I'm not, it's not double speak analysis. I'm bullish on the dollar. It's a matter of, does it bounce here or does it bounce here? Could have bounced there. So that's more of a bounce, a reversal point range, and when we get that, then that should put pressure on the metals. I told you the other day that silver had broken down. This is SI Silver Futures below that 60-minute uptrend line / bearish rising wedge pattern. There's your divergence, negative divergence, and at the point I said you probably wouldn't short it yet because the gold had not broken down and the dollar really didn't have a firm sign of a bottom yet. So I said we could back test it, and that would be an objective short, and that's what you got today. You had an objective short entry, perfect back test. I mean, I haven't touched that line right there. And so rejection, and that is, that's objective short entry number one, But like I said, with a little question mark because gold hadn't yet broken down, and it still hasn't. I'm going to get to that one second, but there's the back test. That's a better short entry because you're shorting at a higher price. And then GC, well, I'll cover the ETFs in a second for you as well. So see, gold's still holding up. Gold's, I remain longer term bullish on gold. Don't get me wrong, but as of now, nothing goes up forever. Negative divergence, building, building, building. Really, no sell signals or anything of that nature. Just the divergent high. But when we look at GLD, well, of course, what I just showed you on the dollar. Once the traders see that there is a reversal in the dollar, which hasn't happened. Remember, we're just at support. We'll probably get a bounce. Then they'll most likely start to sell gold. So we still have some divergences going on there, a back test, of a long-term trend line. But here's what needs to happen to get a really good sell signal in gold would be a break of the uptrend line right there. Then first target would be this price channel. You're in a price channel right now. If we pull back, something like that, boom, 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 and maybe a pullback to that level, 178, 168. So there's gold still in an uptrend, but silver, which ran ahead of gold as it usually does. That one, like I said, did break down. I showed you the futures a minute ago. This is SLV, the ETF. There was our uptrend line. There's our breakdown candle, and there's today's back test. So pullback target, probably down here about 2060 at least, I'd say. You'll need gold to join the party most likely. So not what I call a hard short right now, but definitely maybe time to again book some profits on the longs or raise your stops to protect profits, and or active traders could try a short trade there. Crypto. Yeah, let's not forget about crypto. Crypto, like I said, would and most likely would and did rally with the equity markets. I gave you the 60-minute chart the other day of BRR. These are Bitcoin futures. That was a downtrend line right there, which was popped as well as that price resistance that I gave you there. So that's a buy signal. Little bit of maybe short-term divergence, maybe, and likely, and it will. Of course, it has pulled back with the equity markets. You can overlay charts or just put them next to each other, do it yourself, and you'll see that Bitcoin and the stock market have been moving up and down together, and they will. So today, when the stock market hit the third target on the NASDAQ 100 and reversed, that's about when the same time Bitcoin started to reverse. You can see it here. Go down to shorter term chart, and there it is. And same thing, you follow these short term charts. When you see stocks or ETF or any security run into resistance, in this case it was more so the stock market running into resistance in Bitcoin, but you did have, just like the market, you had negative divergences on these short-term time frames. You were short-term overbought, and look at that. This is a nice re-entry here. The price action's been nothing but bullish in the stock market lately. Should we bounce and hold the pullback levels that I just showed you, this is certainly a level right there. It's a 17,198, so I'll call that 17,200 on Bitcoin futures level that ideally should hold. Let's see if I draw here. Forget about that trend line. It's not relevant. It's not a good one. And that's that. And again, if that's just a 5-minute chart, if we get a little deeper correction, go back to the 60-minute chart, and there's your support right there that should hold. And worst case scenario, it's to keep the bullish scenario intact would be a pullback to back test that trend line like that. So those are your levels on Bitcoin. And then the other trade ideas, I gave you some individual ones the other day. I gave you one of my favorite, MKTX. That one's about, now from the buy point here, it's made it about 2/3 of the way, and it's getting a little stretched like everything. Might need a little pullback. It already came off the highs a little bit today, but up about almost 12% from the breakout point, and getting close to that initial price target right there. And I'll decide whether or not to extend it, but I think that's a good place to take profits if we get it on that almost 336 level. Disney was one of the steady eddy. I don't expect an explosive move, but it has broken out below the downtrend line / falling wedge pattern, so looking good there. Positive divergence. What was some of the other ones I gave you? Individual stocks. I'm trying to rack my. Well, oh yeah, I already covered Amazon, Tesla, and Apple. I already covered those. The only other thing I would throw out is treasury bonds. Those look interesting. ZB, remember this was, well, gosh, we've been trading them long and short. I continue to believe that there'll be great trading vehicles in the coming years. We had this big 60-minute bearish rising wedge with divergence and all that, and gave us a sell signal, put us in a downtrend. And then back here, I highlighted it most recently as a long trade idea on a break of this downtrend line with the positive, aka bullish divergence. We went up, hit my first, boom, second target where, reaction was likely, and we got one. I also said, you could trail stops up. We might be able to carry on up here. This is a level that I could see us going up to, and we hit it now. And we hit it, and we have some negative divergence, and it's right there. So I don't have a very clean uptrend line on ZB. The ZB is the 10-year bond, but I do think we'll probably pull back to this level here, probably come all the way back, I'd say, to 127, 183 at least if you're looking for a short-term trade, maybe even all the way down here, that former T1 target at 125.306. That's for you futures traders. And if you trade the ETFs, you can see TLT on the daily chart. These are old levels we've traded off. There was a buy signal here. These were levels to the upside, and this is still a max potential bounce target we might work our way up to, but everything goes in these little waves. You get the, it's a downtrend line right there. There's your breakout, formed an uptrend. There's your breakdown candle. There was a downtrend line. There's your breakout candle. You can see these trends are getting shorter now. And so this is an uptrend line. This is resistance about 105, but it doesn't show very well here. So again, I'm not super bearish on it. I think you can maybe get a pullback trade, but I am noticing a potential bullish crossover there on the PPO. If we get that, that could continue to carry us on up. So I just wanted to do more so of an update because I've been highlighting it recently. So I think if, any short trade right now in treasuries would be a quick pullback trade. TYX is the yield on the 30-year bond, so it moves inversely or opposite the bond prices. That was my primary uptrend line. We broke that there, and so you had a breakout here of the yield, 30-year bond yield, and that's a back test and a rejection right there. So if yields fall, bond prices should go up, and I think that's ultimately where they go right here. Yields back down to about that 2.94 level right there for the 30-year, and ultimately, but everything is zigs and zags. Although there have been some pretty clean trends lately, but that's it. So just wanted to update that one. If you want to take a shot at it, a little quick pullback trade, and then maybe get long again when the time is right. And that's it. Let me wrap it up here. Let me do so. Just looking at the S&P 500. Remember, the most important thing, we're still above these recent trading ranges. They show very well on the 60-minute charts. And there was our breakout. So if you missed the breakout or didn't take it in the range in anticipation or at the bottom of the range, then this is just textbook. You ran up, hit that second target, good resistance. We're back testing or close enough to the trading ranges to offer another objective long entry, with a stop somewhat below and probably no more than really much below the midpoint of the trading range. And of course that's SPY and QQQ. Okay, doke, I'm going to wrap it up here and get the video out to you. And not sure if it'll get to you before the close. It is 3:42 right now, but let me go ahead and try. All right, this has been Randy Finney with the Right Side of the Chart. Have a great day.